Today is the second Thursday in November, so that means it's time for the USDA report on world agricultural supply and demand estimates, or what we more affectionately refer to as WASDE. From Stuart Peterson, this is the monthly WASDE report overview for Thursday, November 8th, 2018. My name is Chad Goodwill, and today I am joined by Lucas Qualman, one of the market advisors on the grain team in Market 360. Well, good afternoon, Lucas. This is kind of exciting for me. I get to talk to you twice in 1 week. Thanks for taking the time to get together again.
Yeah, no problem, Chad.
Wonderful. Well, what I want to do is, I know that the WASDE report came out today, and I was hoping that you might be able to kind of dissect that information for us, help us to understand what they had communicated, and then translate that into what we should be thinking about as far as the commodity markets moving forward. So I know that, let's start with corn. I know that at least domestically the numbers were reasonably bullish, which is kind of exciting for us. But I think that there might be a little bit of confusion on the world numbers. Would you be willing to just kind of start with corn and walk us through what you saw going on there?
Sure, I can do that. And
thanks.
I guess this WASDE report was definitely a strange one as far as the world numbers goes. We had a report come out from China basically yesterday saying that they went back and looked at the last 10 years of production and changed their corn numbers. So there are some pretty big changes as far as the world ending stocks goes. Basically, you can see on this chart that in October, the ending stocks were estimated about 159 million metric tons, and the USDA increased it all the way up to 307 million metric tons, mainly due to carry-in production from China. So this was way above pre-report estimates.
Wow.
It's not, I'd say, as negative just because since they changed 10 years worth of data, our carry-in just increased a lot, which is where those numbers came from. When we look at like the stocks-to-use ratio for the world corn supply, we were before this basically down in this range, so one of the tightest stocks-to-use going back to 1995, and now we're kind of towards the upper end. But all of these green bars, all of those numbers ended up getting changed by the USDA due to those different China numbers. So we do have basically the last 4 years ending stocks, or the stocks to use ratio, was a lot higher than what we had initially thought. So it's, I guess, kind of the analogy I would use is it's not as bearish as what you'd think, because really the last 5 years we've been standing on a lot thinner ice than what we had thought. And if we didn't fall through in the last 5 years, now that the demand is shrinking, or that the supplies are shrinking, there's no reason for us to follow through right now. And we still have basically the last 2 years, world demand has exceeded world production. So we are seeing that trend in the right direction. So I don't think a whole lot of changes, at least overall, as far as our price direction or thoughts on price direction would go. It's just maybe not as bullish as far as the world numbers as what we had initially expected. Okay.
Well, that's kind of a consistent theme. China is messing up with the commodity market numbers for us. So let's eliminate China from the equation here and talk about domestic corn numbers. What did we see there?
There, we ended up with basically a bullish report. The U.S. corn yield came in at the lower end of expectations, a little bit more of a decrease than what the USDA was, or than what the market was expecting, with 178.9 yield, down from the 180.7 from the last report. The USDA will have one more adjustment as far as yield numbers on the January WASDE report, and typically that ends up being within like a bushel and a half of the November number. So we do have the potential that we could get down to as low as like 177 for yield, which would be only 3 bushels higher than the initial yield. We'll just have to see what the USDA adjusts in the January report. Ending stocks also came in kind of towards the lower end of expectations. So we did see the U.S. ending stocks drop. And when looking at kind of what the big changes on the report, again, was the yield, where the USDA dropped by 1.8 bushels. So that decreased production. We did see a slight decrease in feed and residual by 50 million bushels and exports by 25 million bushels.
Okay.
So half of the decrease in production was offset by a decrease in demand, but we still saw a decrease in ending stocks and a 0.5% decrease in the stocks to use ratio in the U.S. So when we look at like the U.S. stocks to use ratio, we're still just above that 10% mark for 2018 and 2019,
wow.
which say anything below 10% is really tight. So when you look at 2017, 2018, we definitely dropped a decent amount of the stocks to use year over year. So
wow.
It's fundamentally getting tighter year over year, which is kind of what we expected going into this report and from the last couple of reports.
Nice. Well, it's nice to get a little bit of good news. So did any of that translate into higher corn prices in the markets today?
Well, today, as far as prices go, we saw basically a two-sided day. The initial report reaction was about 6 cents higher, and then I think everybody ran into the world numbers and huge miss there, and we ended up being like 6 cents lower.
Okay.
We basically ended the day roughly about unchanged or up a couple of cents. So when you look at kind of this sideways range that we've been in, or this wedge, we basically retested the top and the bottom of the wedge. So
okay.
We'll have to see kind of what sort of follow through we have tomorrow as people have more time to digest what those world number changes were. So really not a whole lot of change price wise. We'll have to see what sort of follow through to the upside or downside we see in the next couple of days.
So we need to hurry up and wait, is what you're saying.
Yes,
right?
Exactly.
Okay, so moving then over to soybeans, I know that it wasn't quite as exciting there. What did they let us know about today for soybeans?
Yeah, so for soybeans, ended up kind of being a mixed bag as far as the numbers. The soybean yield ended up coming lower or below the bottom end of the trade expectations at 52.1 bushels. So the USDA knocked a bushel yield off of their previous estimates.
Wow.
The lowest that the market was expecting was like a 52.5 bushel yield. But on the ending stock side of things, we did see a decrease in demand, which ended up increasing ending stocks above what the market was expecting. So even though we saw bullish yield numbers, we saw bearish ending stocks numbers. So basically, on the production side of things, USDA lowered production by about 90 million bushels, but they did cut out 160 million bushels to exports, just due to the slow pace that we've seen through the month of October, which has put us behind the pace we need to meet the USDA estimates, kind of, again, due to the trade issues that we've had with China. So overall, saw the ending stocks increase by about 70 million bushels, and the stocks to use increased by about 2.5% to 23.3%.
So how does that, I was just going to say, how does that translate then against historical numbers?
Yeah, so as far as historical numbers, we are again looking at basically the largest soybean stocks to use ratio going back to 1995.
Wow.
So even with the increase there, we're already looking at abundant soybean supplies. So at this point, if we see more of a bigger increase in ending stocks, it doesn't have as big of an impact as if we were, probably in like the 300 to 400 million bushel range.
Right.
But it just makes it a little bit harder heading into next year to, I guess, reverse that problem just with lower acres. We definitely need a lower acreage for beans to help kind of straighten out this supply and demand situation, or just a whole lot more demand than what we're looking at right now.
Yeah, this is a pretty pervasive issue. One of the podcasts I listen to every day is Marketplace on NPR. And yesterday they were talking about this very issue. And normally they don't get into commodities a whole lot. And so for it to show up in that conversation kind of lets you know that this is something that a lot of people are talking about, and that it's more important probably than we've seen it be in the past. Wouldn't you say? Yeah,
I think it's, definitely a nationwide talk, even among people who aren't involved in agriculture, with all of the other trade issues that we have with China. So it's definitely been brought to the forefront. So good or bad, it's hard to say.
Yeah.
Obviously, price wise, it's on the bad side of things, but I think there's still some optimism that if we get a trade deal worked out with China, that it ends up being better in the long run. So that's always the hope, and hopefully that's what ends up happening.
Okay. So what about globally then with soybeans? Was there anything there to give us to chew on a little bit?
Yeah. So globally, ending stocks increased by a little bit more than what the market was expecting, kind of towards the top end of the range. When you look at kind of the stocks to use overall, we're still looking at kind of the largest stocks to use since 1995-96. So while it did get a little bit bigger, not a whole lot of changes there. So I guess nothing overly exciting or market moving for those world numbers.
Maybe just make something up just to satiate us. All right.
So then I guess going on to like price action, today it was a pretty positive price action, as much as you can say, for closing it basically unchanged. We were down about 14, 15 cents throughout the day, but then closed about unchanged here. So ended up kind of not a whole lot of chart damage there, and that actually does look like a pretty good, I guess, pretty good daily bar, assuming we can get some follow through in the next couple of days to the top side. So I guess all in all, soybeans took it on the chin and took it well.
Well, hey, there's something to be said for that. So, Lucas, let's transition then over to wheat. What sort of revelation did the USDA offer us in that market?
For the wheat market, there wasn't a whole lot of changes. So if you look at ending stocks, we basically came in just a little bit lower than what the market was expecting.
Okay.
So that was on the positive side as far as the wheat goes. The biggest change there was just the increase in the exports that the USDA is expecting, mainly due to the kind of the issues that Russia's been having as far as their wheat exports over there. Right now, the pace of exports that we have is not up to the pace as what the USDA is estimating, but I think obviously the hope is that those end up picking up in the near to midterm. So did end up seeing a decrease in ending stocks and a decrease in the stocks to use ratio for wheat.
Okay.
Just looking at kind of the U.S. Wheat supply, while we are kind of towards the top end as far as historical stocks to use ratio for wheat, we are quite a bit lower than last year. So at least the direction of stocks to use change is on the positive side of things.
Okay.
Looking at the world numbers, this is another number that kind of got skewed by China's revisions to their wheat supplies. So there's a little bit bigger increase than what the market was expecting there. Looking at the world stocks to use for wheat, it's still kind of towards the top end of the range. So we've got abundant supplies of wheat, but there is quite a bit of that wheat is in countries that typically don't export wheat. So we're actually a little bit tighter than what this chart would say as far as that goes.
Well, what did that translate into price action then?
And then as far as price action, we did end up the day basically lower, but we are still kind of in that sideways range that we've been in since about the beginning of September. It looked like we kind of broke it in the middle to end of October, but we kind of got back up to it. So until we see a solid break to the bottom of the top end of the range, there's really not a whole lot to do for wheat until we see which way prices go.
Okay, good. Well, I guess overall there's nothing to get too upset about or necessarily too excited about, which leads to my next question. And one of the things that we really try to do well here is not to get distracted by small moves, right? Acknowledge when small moves happen, but really try to pay attention to the larger picture when it comes to marketing. And so my question for you then becomes, is there anything that we saw today that would lead you to believe that this is an indicator that there might be influence on a larger trend? Or is this just something to make note of and kind of move on from here?
Yeah. I would say the corn or the U.S. corn numbers today, especially with the decrease in yield, is something to watch going forward.
Okay.
Those are positive enough that we, should provide some more strength under the market, and given our tight supplies or tighter supplies, relatively speaking. We should be able to see some upside there. Probably the thing to watch, or the thing that today that probably isn't as big of an impact as what everybody's talking about, would just be those world corn numbers. Since they were just changes for the last 10 years, we've had large abundant supplies of corn in the last 5 years, and we are shrinking. So that would probably be the big thing today, which I wouldn't worry too much about, is just those world numbers.
Okay. Good. Anything else?
No, not a whole lot more as far as big things. Soybeans ended up being about what we've been used to at this point, so not a whole lot of changes there. So nothing to get overly too excited about.
Good. Well, I want to thank you again for taking the time to walk through all of this with us. I know oftentimes this can be a lot of information, and it helps to have someone to help you kind of interpret how that works. And I guess the big news for me then is that we're supposed to get 5 inches of snow tomorrow night. So you can send over positive thoughts for me.
Yeah, we're only supposed to get less than 1, so take as much as you want. Speaking for somebody in Wisconsin.
Yeah, exactly. You send the cold air, and Lake Michigan does the rest.
Yeah.
All right, Lucas, thanks so much.
Yep, no problem, Chad.
Thank you for joining us for the Market 360 monthly WASDE report overview. To access additional resources or learn more about how you may be able to improve your grain marketing, either visit us at stewart-peterson.com or give us a call at 800-334-9779. This is a production of Stewart Peterson Incorporated in beautiful downtown West Bend, Wisconsin.